What is going on, y'all? Robert Sykes, KetoSavage.com. I'm coming back at you with another AMA. This one's all about finances, so a little bit different, a little change of pace from the normal nutrition talk. Before we dive into this, let's roll the intro. All right, so this question is brought to us by Kevin, and he asks, you have mentioned in a few interviews that you were in significant debt early in your life. How did you overcome it, and how are you better today as a result of that experience? Whew, all right, let's roll up the sleeves on this one, y'all. So, yes, I was definitely in a lot of debt early in life. Just to give you a quick little summary, after I graduated college, I got a job in management at the Burlington Northern Santa Fe Railroad, moved up to Washington State. That's where I met Crystal. I decided I wanted to build a business on top of working at the railroad, so I got into real estate. Thought I was going to become a real estate mogul, buy a bunch of small apartment complexes and have a bunch of rental property. Well, the railroad got wind of that. They wanted to offer me a promotion and go to Wyoming, Gillette, Wyoming, but I was bound and determined to build an empire in Washington State. So I quit the railroad, went full on to the real estate, but I didn't know anybody in Washington State. And as a real estate agent, it's kind of hard to make a living if you don't know anybody. So I quickly got into a lot of debt, was leaning on credit cards to basically buy my groceries, pay for my gas, live my life, because I wasn't making any money from the railroad because I'd quit that. Wasn't making any money with the rental properties because that was no longer a thing. So yeah, that was a pretty dark time from a financial standpoint. I had the house that I purchased when I moved to Washington State, had college debt. I had all the credit cards that were accumulating as a result of that pretty much being my, way to live. And I'm pretty sure I was up to like $250,000 in debt or something like that, give or take a few grand, somewhere around that $250,000 mark, with no income coming in. Now, fast forward to today, I've actually got more debt than that now. Like I've got the mortgage on this building. I've got a lot of credit card debt still. Still have some student loan debt. So I've got more debt now, but I'm also making a lot more money now. I mean, the business is growing. The business is generating a lot of cash flow, a lot of revenue. And the debt that I have in the building obviously is relatively good debt because we wouldn't have this building if it weren't for that loan to get this building, and we own this building as opposed to leasing out a commercial kitchen space like we were previously. So that is a positive in my book. The credit card debt that we have now is not really good debt. I mean, credit card debt's never really a good debt. However, we use the credit cards for buying ingredients for the bricks. We use it for travel expenses. We use it for just some softwares, like different monthly fees for the software that we use. So we have credit card debt, but we're paying that down. And all the equipment that we have in the building, we've purchased outright. A lot of companies, they start seeing some growth and they're approached by a lot of angel investors or outside capital, and people will offer them a lot of money at a fairly high rate or an ownership stake in the company. We've never gone that route. We have never taken in outside capital apart from the bank loan to buy this building as a way of operating the business. We've bootstrapped the business from day one, and I'm proud of that because we don't really owe anybody anything in that regard. We don't have other people having an ownership stake that pretty much dictate how we run things. Like when you look at publicly traded companies in the stock market, for instance, you have investors that sit on the board there, and they're much more interested in the quarterly earnings reports and things of that nature, and they should ideally be interested in the long-term growth of the company as well, but they're very specific on quarterly earnings and how the business is doing in a very acute time frame to keep the investors happy and their market share. For us, we're privately traded. Obviously, we never had an IPO. We're not publicly traded on the stock market. So all I care about is the growth and the foundation of the business over a long period of time. We're playing the long game here. And because we've never taken on outside capital, we don't have, angel investors that we're answering to, which I always wanted to avoid. Like for me, starting a business was something I was very passionate about. And if I was to start a business, take on a bunch of outside capital, then have to just simply answer to an investor, I'm basically working for somebody else all over again. And I didn't want to do that. That's why we've bootstrapped everything from the beginning. Because we've bootstrapped everything from the very beginning, we've had expenses, we've had to grow slowly, but honestly, I feel like we've grown pretty quickly. But because we've bootstrapped and grown very organically, we've done so in a very sustainable fashion. We've done so in a way that allows us to grow, in a scalable fashion, in a realistic fashion. And there's always going to be growing pains and stresses on the company, but we've been able to grow and adapt and scale with those changes because it's been so organic and natural. And I feel that's something that I've really enjoyed doing with the business, something that I would highly advocate for other businesses to do, because you just have a much firmer grasp of the reality of your company as opposed to it being inflated by a bunch of outside capital or angel investors or anything of that nature. So you're going to have to kind of look at it on a case-by-case basis because every company is going to be a little bit different, but I really like that we've done it that way with our own company, that we've kept everything in-house, that we've bootstrapped everything. And again, we still have a lot of debt, but the main difference now between having so much debt now versus the debt that I had previously is that we have a vehicle to pay that debt off. We have a business that is growing, a business that is flourishing, a business that will continue to grow if I make smart business decisions. In the past, when I was $250,000 in debt, I had no job, I had no business, I had no plan, and that was the cause of a ton of stress. I'm glad that I went through all that because it made me appreciate what I have now so much more. It gave me a lot of perspective, and it taught me the value in things. When it comes to spending money for the business and for my personal life, I don't really spend that much money on things that don't make more money. Like I'm still driving the same truck that I was driving as a junior in high school that I saved up working 4 or 5 different jobs, mowing lawn, splitting firewood, saved up $5,000 and bought that truck. I'm still driving that same truck today because for me to buy a new truck is not really going to directly result in any more sales or any more growth for the company. I don't mind spending money on things that are expensive if they generate more growth for the company. This is why we've bought a lot of equipment for the business. This is why we bought this building. This is why I invest in my good quality people that work here. I don't mind spending money if it's going to be for the betterment of the company's long-term growth. I don't plan on buying a Ferrari anytime soon because it's hard to see how that would translate to additional growth for the company. I don't really spend money on my personal things because it's hard for that to translate to additional growth for the company. With things that make us more money, with things that cause growth for the company, with things that cause us to build, grow, and adapt and evolve, I'm willing to spend money there. I don't really spend money on frivolous things that aren't really good for anything. That's not to say that you shouldn't do that. I mean, everybody kind of has to address that in their own form and fashion, but for me, being in a place where I was just incredibly distressed, incredibly in debt, and incredibly lost, to now have a vehicle, to now have a plan, to now have a purpose and a mission, I don't want to distract from that. And I'm less excited about buying stupid little silly things that don't really cause any growth. I'm much more excited about the next piece of equipment that we're going to get to scale up the business, the next thing for the building. Eventually we're going to have to outgrow this building and build another building just down the lot from us. So we've got a 4-acre lot here that this building sits on. This building is twice as big as the 3 buildings that we were leasing, but I bought this building specifically because it sits on enough land to grow and build an additional space. And I think that's the trajectory that we're headed for. So I'm always having a long-term vision. I'm always having a plan for growth and development in the future. I'm not doing this in a very acute quarterly assessment style approach. I'm doing this for the long game. I'm not planning on selling this company off to some, angel investor or do like an IPO and let it be a publicly traded company. I'm planning on growing it, from the inside, having a solid foundation and doing so the right way in a sustainable fashion that is continued to be bootstrapped from within. So kind of a long-winded answer to your question. Hopefully that sheds some light on it. But yeah, basically to summarize, I'm still in a lot of debt now, even more so than I was previously, but it's not all, but much more of it is good debt that is there to cause us to grow at a faster rate than we would had we not taken on debt. A lot of people, I'm just going to keep being long-winded here, a lot of people think that all debt is bad. You should never be in debt. And that's not really the truth either, because if that was our philosophy, we would not have been able to grow at the rate that we have. I mean, we would not be able to have afforded this building, and then we would be stuck in a commercial lease, with a building that we don't own, that we're just throwing money away in the form of rent, and it would be very hard to scale if we would stay at that building. So I'm not opposed to debt, but you have to be smart about how you do your debt. So yeah, hopefully that answers the question. Thanks so much for the question, Kevin. You requested some chocolate malt keto bricks, so I'm going to send some of those your way. For anybody that does not know how these AMA videos work, if you submit a question, a well thought out question, via the form link in the description below, and I use your question on one of these videos, then I will send you some free keto bricks with the flavor of your choosing. Kevin's question here was back from 2020, I think. So I'm pulling from recent questions, old questions, all kinds of questions. So thank you again, Kevin. Thank you all for tuning in, and I'll talk to you next time.